So in this video, I will show you a stock where I lost around 3%. So let's look at JBM. This is JBM Auto. So first I will show you where I bought the stock. I bought the stock at the high of this candle. So this is 2190. So let me draw a line there. This is 2190. Let me remove this line. Okay, so I will tell you why I bought the stock. I bought the stock on this day. As you can see, the big red candle, I lost 3%. So first, let me show you the three moving averages. The blue, the green, the red, the 50-day, the 150-day, and the 200-day. So the blue is above the green and the green is above the red. That's a stage 2 powerful uptrending stock. That is why I took interest in the stock. Let me remove the moving averages. Okay, so why did I buy the stock on this day? So if we look at this base, it started from here. The stock started to consolidate from here. So this is the highest point in the base. This is the lowest point in the base. Again, after this, the high of this candle is the highest point in the base. This becomes the next lowest point in the base. And the high of this green candle, that becomes the next highest point in the base. So this is a proper buy point. Okay, point number 1, 2, 3, 4, and the high of this candle is 5. So point number 3 is my proper buy point according to the system that I use. This is called as the volatility contraction pattern. This was explained by Mark Minervini in his books. Not the perfect contraction that you would like to see, but this is where the base begins to start. So that becomes an ideal point. So if the stock can break above the yellow line, it could go up even further. So I bought on this day. So I normally execute my trades on the 15-minute chart. So let us go to 7th of June, 15-minute chart. Okay, let me go to 7th of June. So this is a 15-minute chart. This is the first candle, second, third, fourth, fifth. Finally, on the 12:45 candle, look at this small green candle. It broke above the yellow line. So the moment the stock breaks above the yellow line, I buy. Okay, I took a 5% position here. Look at the next candle. The volume was 10 times higher than the blue line, the 10 times higher than the average volume on the 15-minute chart, almost 10 times higher. And the stock went up 2.2% in less than 15 minutes. That's a very powerful stock movement in such a short period of time. I said fantastic. So I kept my stop loss at 3% below the close of this green candle. This is my standard stop loss level. And look what happened next. 6% crash in 15 minutes. Okay, now I can't control that. I just kept my stop loss and it just hit my stop loss, got me out of the trade. So I lost 3% here. My position size was 5%. So 5% multiplied by 3%, that is 0.15% of my portfolio is what I lost on this trade. But what could I have done to avoid this loss? Could I have done something? Yes. After 15 minutes, I could have moved my stop loss from 3% to break even. And why? Because if you look at the daily chart, let me go back to the daily. Just before this candle, look at the volatility here. Okay. So if I change this to a bar chart, see, I bought on this red bar. If you just before the red bar, look at this 7-8 candles. There's tremendous amount of volatility here. Okay. That is not the kind of volatility we would like to see just before the breakout. Before the breakout, we want tight base formation like this. Okay. Or if you see these candles, these are very tight candles, very tight closings, very close to each other. And the range of these bars is also very small. Moreover, just before this candle, just before this red candle, the stock had already gone up. If you look at this candle, that is, this is a 9% candle and this is a 2% candle. So Before the breakout, the stock had already gone up 11%. So probably the stock decided to take some rest on this day. The people who had made money on these 2 days, probably they wanted to get out of the stock. That is why the price could have come down. Whereas if you see, the stock still remains a stage two powerful stock. Just because the stock crashed on that day by 5.72% doesn't mean that the stock has lost its favor. It is still an uptrending stock. It is still in a base, and there is a potential opportunity if it creates another buy point here, which it has, by the way. You can buy here, but it's far away from the closing price. That is why I am staying away from that. That distance needs to be at least 5% for me to get interested in the stock. So that is the reason why I had to take a loss. But would I take such kind of trades in the future? Of course I can. Of course I will, because I know that the volatility contraction pattern is a very uh, profitable pattern. You can read books written by Mark Minervini. I use this pattern to trade. And if you look at some of my previous trades, like KFinTech or GeoJeet or Moil, on which I have made videos, this pattern has worked very powerfully. The stocks went up like 16-20% in 4 or 5 days. So take advantage of that pattern, and you will not have profits on every trade. Occasionally, you will have to take a loss, sometimes almost a 3% loss. Generally, the losses are less than 1.5% because I'm executing the trade on a 15-minute chart. But in this case, it was extraordinary movement. Can't do anything about it. So I hope you got value out of this video. Thank you so much.